Let's go over the trading rules for the scalping one strategy so we can figure out how to spot long trades. The first rule for this trading strategy is to look at the scalping one momentum indicator, and that's this blue indicator here. And the rule is we need this indicator to be above zero for long trades. It doesn't matter how far above zero, all we need is it to be above zero. We just need a positive value. So if the scalping one momentum indicator, which is blue right here, if this is above zero, we can go on to the next rule, which is to look at the scalping one trigger indicator. And the trigger indicator is this red indicator here. And the rule for this indicator is we need it to cross from a negative value to a positive value. It's a zero line cross to the upside while the scalping one momentum is above zero. So if these two conditions are met, we're going to go long on the opening of the next bar. And that's exactly what we see here. Now we're going to stay in this long trade until one of three conditions are met. Either our profit target's met, our stop loss is met, or the trigger indicator tells us to exit. So you're going to stay in your long trade as long as the trigger indicator is above zero. As soon as the trigger indicator closes below zero, you're going to exit your long trade on the opening of the next bar. And that's what we see here. It closed below zero on this bar on the trigger. That means on the opening of the next bar, we're going to exit. Now let's see if we can figure out how to spot short trades using this strategy. The trade rules are exactly the same, they just use the inverse. What we're looking at first is for the scalping one momentum, which is this blue indicator here, to be below zero. If the scalping one momentum indicator is below zero, we're just looking for short trades. And then we're going down to the scalping one trigger indicator, and we're looking for a zero line cross from positive to negative. It has to be above zero on one bar, and then on the very next bar, it has to be below zero. So we see that here. And what that would mean is on the opening of the next bar, we want to go short, which is exactly what happened here. Now, exiting short trades is the same as exiting for long trades. We're going to exit because of one of three conditions. Either your stop loss is going to be met, your profit target is going to be met, or the scalping one trigger indicator is going to tell you to get out. Now the trigger indicator has to stay negative in order to stay in a short trade. So if it turns positive, if it closes in a positive value, that means on the opening of the next bar you want to exit. And that's exactly what we did here. Let's go over the entry rules for long trades for the scalping 2 strategy. So we see a long trade here, and let's figure out why we went long. Well, rule number 1, we're going to look at the scalping 2 momentum indicator, and we need this indicator to be above zero to take long trades. Okay, as long as we see that that's happened, we move on to the scalping 2 indicator. And what we're looking at here is just really a chart pattern with the scalping 2 indicator. What we're looking for is what we call a peaking bar. Now this bar we would consider a peaking bar because it's greater than the bar to the left of it, and it's greater than the bar to the right of it. If you see this 3-bar pattern, which we call a peaking bar pattern, if you see this, that means go long on the opening of the next bar. And that's exactly what we see. Now we're going to stay long as the values on the trigger indicator keep decreasing in value. You can see that from these 3 bars on the trigger indicator, these 3 bars are decreasing in value. As soon as you have a bar that closes and it's increasing in value from the previous bar, we're going to exit the long trade. So we see that we stayed in this trade for just 3 bars, and the reason why was this trigger bar right here, it was greater than that bar. It was increasing in value, and in order to stay in a long trade, you need it to decrease in value. And now for the scalping 2 strategy, we're going to stay in trades and exit for only one of 3 reasons, very similar to the scalping 1 strategy. We're going to exit if our profit target's met, if our stop loss is met, or if the scalping 2 trigger indicator tells us to get out. Now let's review a short setup. The short setup is the same as a long setup, it's just the inverse. So the first thing we're going to look at is the scalping 2 momentum indicator. We want it to be less than 0, just a negative value. That's all we care about. And then we need that peaking bar pattern on the scalping 2 indicator. Now this is the scalping 2 trigger right here, the red indicator, and we see the peaking bars right here. You see how this is the peaking bar, and it's less than the bar to the left of it, and it's less than the bar to the right of it. That would mean go short on the opening of the next bar. And we went short right here with the chart alert. You see that happened. And now we're going to stay in the short trade until one of 3 conditions are met. Either your stop loss is hit, your profit target's hit, or if the scalping 2 trigger indicator, if it starts decreasing in value. In order to stay in a short trade, we want this trigger indicator to increase in value, but if it starts decreasing in value, that means on the opening of the next bar, you want to exit your short trades. Now, these strategies are really unique in that they manage risk very well. They actually use 3 stop losses. you use a per trade stop loss, you use a daily stop loss, and a weekly stop loss. So it manages risk using 3 stop losses. Now, another thing that makes these strategies very unique is they don't use normal bars. They don't use time-based interval bars. They don't use volume bars. They don't use tick bars. These bars are actually range bars. What that means is each bar has an identical range. So the difference between the high and the low of every bar is equal. These particular range bars are 6-tick range bars. Now, it doesn't mean that you need 6 ticks of trades. What this means is you need 6 ticks of price movement in one direction or the other. So if we take a look at this bar that I have selected right here, we see that the high is 1133 and 3/4 and the low is 1132 and 1/4. Now the difference between the high and the low is exactly 6 ticks. And now if we go to the bar previous to it, you see that the high is 1135 and 1/4 and the low is 1133 and 3/4. Again, the difference between the high and the low is 6 ticks. Now the only way this bar was created was because it traded 1 tick below the low of this bar. So the nice thing about these bars and about these chart types is during really active times, you're not going to get really big spikes on the chart that throw off your indicators and throw off your trading strategy. And during really low times of volatility, you're not going to get very many bars, which means you're not going to get fake out signals. You're not going to get whipsawed. During the night session, you may only get just a couple bars because the whole night session may just trade within 6 or 9 or 12 ticks. That would mean that you only get 2 bars in that case. Moving forward to the day session, you may get a ton of bars because you may have a ton of movement because of maybe a news announcement. So that's something that's really unique about these strategies is we use range bars. So you don't need to worry about wanting to eliminate trades overnight because you think that they may be more of a fake out trade or low volatility trade. It's okay to still take those trades. These strategies are designed to trade 24 hours a day. And really the reason why we're able to do that is because we're using range bars. Range bars allow you to see pure price movement. Now, when you buy the subscription, you get these strategies and you're able to trade them. The first thing that we do is we send you really detailed video tutorials. We go in depth, we give you high quality video tutorials that show you exactly how to spot these trade setups over and over. And in this video, I'm just trying to quickly go over this because we have a limited amount of time. But in the video tutorials, we really take a lot of time to make sure you guys really understand how to trade these strategies. We give you all the details that allow you to actually trade these strategies. Now, one thing I do want to point out to you is our performance guarantee. When you pull up the scalpingemini.com homepage, you can scroll over the Buy Now button and then select Performance Guarantee, and then you're going to pull up this page. What the Performance Guarantee is, it's a guarantee that you're going to make at least twice your monthly subscription fee among both of the trading strategies in any month according to the track record, or you're going to get your money back. Now, remember, the track record is net of commissions. The track record is also net of a 30% reduction in performance. So every winning trade, we reduce by 30%, and every losing trade, we inflate by 30%. So if both the strategies, the Scalping 1 strategy and the Scalping 2 strategy, don't make at least double your monthly subscription fee, we're going to refund your complete subscription fee. Now, another thing is if you're not able to self-trade these, if you don't have the time to sit around for 8 hours a day and trade these or time to really to take each signal over a 24-hour period, which is what we recommend, we do have auto trading. It's broker-assisted auto trading. Now, the biggest difference between these are the self-trading strategies. You're actually seeing the indicators, you're seeing the alerts, you're pulling the trigger. Now, the auto trading strategies, they're actually 2 different strategies from the self-trading strategies. And you don't get the indicators and you don't get the alerts. Those are just auto-executed by our recommended broker, which is Lions Futures. You can find their website at lionsfutures.com, and they actually pull the trigger for you. And you can log into your trading account at any time and see the trades in real time as they happen. Like I said, the only difference is you're not going to see the indicators and you're not going to see really the algorithms behind the auto trading strategies, which are different than the Scalping 1 and Scalping 2 self-trading strategies, where we do give you the indicators and we do give you the alerts. If you have any questions about auto trading, or if you have any questions about these strategies for the self-trading Scalping 1, Scalping 2 strategies, contact Lions Futures. They're a recommended broker. Their brokers know exactly how to set up the charts, they know how to use their trading platform, and they know exactly how to use these strategies. And they know how to spot the entries and spot the exits, and they know all the rules to the strategies. So if you have any questions, you can actually give them a call. If you have any questions for us at scalpingemini.com, you can simply send us an email. But otherwise, if you want to talk to someone on the phone about our strategies, just give lionsfutures.com a call and they'll answer any questions that you have.